As the financial markets and currency grapple with the after effects of the Fed's latest interest rate decision and domestic political turmoil, the authorities are pulling the stops in an attempt to stabilize the economy. Our Moon Hye-ryeon has the details.
Following the U.S. Federal Reserve's interest rate cut of 25 basis points and a hawkish turn of projections for next year, the South Korean won plummeted against the dollar to lows unseen in more than 15 years. On Friday, the South Korean won to U.S. dollar exchange rate closed at 1,451.41 per dollar, closing past the 1,451 per dollar mark for 2 days straight. The country's benchmark KOSPI also fell sharply, dropping past the 2,400 mark throughout the trading session, before closing at just over 2,404. The tech-heavy KOSDAQ also shed more than 2% from its previous close. In light of these developments, Seoul is responding with a series of measures to stabilize the foreign exchange market. On Thursday, immediately following the Fed's announcement, the Finance Ministry and the Bank of Korea said it plans to extend the foreign exchange swap deal with the National Pension Service to the end of 2025, as well as increasing the limit from $500 billion to $650 billion. A foreign exchange swap can help to stabilize the volatile foreign exchange market as it absorbs the National Pension Service's demand for US dollars when making overseas investments, and therefore lowers pressure on the Korean won. It also ensures that the government's foreign exchange reserves are not permanently impacted, since funds are returned at the end of the swap. The government also announced on Friday that it would ease regulations on foreign currency liquidity for banks and restrictions on foreign currency loans for domestic use. When restrictions on foreign currency loans are eased, businesses, particularly export-orientated businesses, are more likely to take out loans in foreign currency such as the US dollar. This means that there is a higher supply of the foreign currency in the domestic market, which in turn counteracts the pressure driving the won's value down to stabilize the exchange rate. Moon Hye-ryeon, 아리랑뉴스.